Good afternoon, good morning, and good evening to all in the regulators track. It's my great pleasure to open the track today, and thank you very much for the attendance here. It's our usual track where we are discussing the RegTech but also subtech topics, and there's quite interesting agenda which will be followed after our opening panel discussion. And I have a great pleasure for the panel discussions to welcome Martina Drvar and Juliana Müller. And I would ask both of you to briefly introduce yourself, and then I will explain why we ask you to attend this panel on the topic of RegOps. So Martina, if you could maybe start, please.
Sure, Maciej. Well, thank you for the invitation. So my name is Martina Drvar. I'm a vice governor at the Croatian National Bank and fully fledged banking supervisor for more than 20 years. Before being appointed to this function, I was also a leader of the supervisory team at ECB, supervising large subsidiaries from the US banks in the Eurozone. And before that, I spent most of my career in the central bank, where between all of the functions, I was a part of the project team. I was the head of the project team that built a data warehouse for supervisory reporting. And that's why I got myself an invitation for this interview.
Thank you very much, Martina. We'll be coming back to your warehouse project for sure. And Juliana, over to you, if you could briefly introduce yourself.
Yes, with pleasure. Thanks also from my side for the invitation to this panel. So my name is Juliana Müller. I worked for 13 years in consulting banks to implement Pillar 1 regulations and also especially implement tools, implement some new data requirements. And in May 2019, I joined Deutsche Börse Group. And here I do implement also a new reg reporting tool. We're in the midst of this ambitious project. Yes, and I'm here in that role today.
Thank you very much. And ladies and gentlemen, as you can see, we have a representative of the bank and of a regulator. That's why I like this panel today. And as already explained yesterday on the main stage, we would like to talk about this concept of RegOps. And finally, what is behind this RegOps concept is the future vision to allow regulators without burden for the banks to obtain data per so-called pull approach. And again, there will be more details on the various aspects of this concept, standardization, technical infrastructure, in the later session by my colleague Daniel Münch. So I would encourage you to stay here to see the session later. But before going into a lot of details of this approach, especially on the technical or on functional side, I would like to have the dialogue among the banks and regulators represented today by Juliana and by Martina, how such approach could work in the future, and maybe what are the obstacles on the way to implement such approaches. We will start discussing this RegOps from a bit of the future perspective, so a couple of aspects there. Then we will move into the topic of governance models, so how such pull approaches, regulators pulling data from the banks, could work in the future. And finally, we will discuss a few outstanding challenges on the way to the data pull approach. But let's start with the approach in general. Martina, first question to you. We are discussing RegOps as the future model. So for, I think, many regulators here attending today, it's a bit of the rocket science. Yeah? So this is what I think Andy Haldane and Benoit Curé, these are their visions and dreams. They sound a bit far in the future. While at CNB, it's not really such a new thing, because you mentioned already you were in charge of this data warehouse project, and you have achieved similar outcomes in Croatia already a few years back. So could you explain, what role was the data standardization playing, because that's one of the aspects on the RegOps, but also what was the technology background of your project? So let's start with your use case.
Okay, thank you, Maciej. So basically, in the nutshell, in 2007, as we were starting to prepare for joining EU and prepare for all of the statistical data that was supposed to be delivered to the ECB and prepare all of this maximum harmonization, supervisory reporting, FINRA and Corp, we understood that we are going to lose a lot of data. So basically, we understood that in order to preserve this ability to have a better maybe view at the granular level as it was before in Croatia, we should do something, and also we should kind of optimize on the delivery from the banks. So we started these workshops with the 10 largest banks, namely the head of their accounting departments, to understand what would be the simple way to introduce the reporting on a very basic level, where we would gather raw data. And finally, from 2007 to 2010, we made it happen that approximately 1 year per each of the period of this project we spent in designing, in prototyping, and testing these new collections. Why is it a kind of a special? Because we put in a center of our interest financial contract. Financial contracts is a very simple concept, understood in each of the banks. It doesn't have the flavor of regulatory attributes that we add on in terms of defining the contract in the spectrum of, I don't know, interest rate risk, credit risk, or liquidity, or whatever kind of mirror we want to see the financial contract as such. And therefore, it was a huge success in terms that at the end, we collect, since 2010 until now, steady flow of data, which is related in a way that we collect some 42 attributes of different financial contracts and some 72 values added to this contract. To make it very simple, for mortgage, we describe mortgage in terms of maturity, currency, remaining maturity, how it is marketable in terms of statistical data. So it's very, very granular, and it's a steady input for our analysis. Of course, in the meanwhile, we had to adopt FINREP and Corp as aggregated data. But for our forensic, in terms of understanding concentrations in the market from the past, to be able to understand connectedness of the clients, and also for the forecast, we use our data warehouse. In order to enable our dialogue with the banks, we kind of share with them also the rules how to aggregate reports for our communication based on these very, very granular databases that we are collecting. So sharing those rules with the banks enable us to design some 10 to 15 outlined tables, so to say, so two-dimensional reports, where we check the aggregates. So I think that the key success for this project was that it was run around financial contract. It avoided any sort of aggregation, and all of the regulatory attributes were added additionally to the main collections, which enable us to be very flexible to the changes of the regulations. So we focused ours on simplicity and something which is steady, and that is a bank and the client and the contract between those.
Thank you very much, Martina. And I think we'll be coming back to this conceptual aspects, especially this base around the financial contract. And Juliana, let's fast forward to a few years from now. Assume that the regulators in Europe have implemented RegOps approach, so the data pool in a similar conceptualization as Martina just described. So there is a single contract level dictionary describing the financial attributes and the values behind the financial contracts. There is some technology backbone which allows the Bundesbank, CSSF, SSM, ECB to pool the data from Deutsche Börse, from Clearstream. And if you think about your organization in the future, what do you think, what would be the pros and cons that such model would bring to your organization?
Mm-hmm. Yes. First of all, it sounds like a really interesting approach, and it would lessen the regulatory burden, which is obviously quite high for the banks to prepare the reports, to check the reports. Further, I think what is really interesting in this pool approach is that I would assume it would make ad hoc requests towards bank not necessary anymore, because the central banks would have that pool of data where they can draw themselves the information from. And therefore, I think it would be a really interesting concept for the bank, because it would also lower the cost, obviously, of producing this data over time. But that's really in the long term. When we look more at the short term, so first of all, we need to get there. And to arrive there, I think it will take quite some time, because the effort of cost of such a project or to implement such an endeavor, I think would be quite high. We have seen it with the credit new regulation, which is going towards that direction. I mean, it's for the credit data. It's similar. The financial contract information needs to be delivered, and banks are still struggling there. Further, so that this pool approach works, we really need to ensure at the banks the data quality needs to be there. And that is something where there I speak more from my experience as a consultant, where quite some banks are still struggling to have the necessary data quality. The AnaCredit implementation has revealed some shortcomings or some work which still needs to be done at the institutional levels, and the processes would also need to be aligned so that this data quality and the availability of the data can be ensured. Because especially when we look at month-end or quarter-end reporting data, it's not available on the next day. You have some adjustments to the data which are made by the accounting, late bookings, and so on. And from a procedural point of view, this data needs to be looked at, needs to be ensured that the quality is there. So it could not be made available straight away to the regulators. So this pool approach will need to take also this procedural points into account before making this data available. Yes, so that's the pro and cons I mainly see with, well, this RegOps.
Martina, maybe on the data quality, what's your experience in Croatia on the data quality of the banks on the granular level?
Yeah, I think I agree with Juliana. So that's really true. We kind of experienced since the introduction of this new system, less ad hoc reports needed. We've seen that the quality of the data is much better, because also the manipulation is less possible, because the frequency of reporting, for instance, all of the items of the balance sheet is every 10 days. So it's impossible to kind of manipulate the data within this very short time frame. And also we can see if there are some inconsistencies. So for sure, this is a huge, let's say, changeover for the banks. And as an argument, like a contrast, why we should not do it. Very often we are talking about legacy systems, but this is kind of a thing where you really invest maybe a lot in a very short time frame, but that for a long time you have some kind of a consistency, security, good quality data, and I think it should be done. It's just you cannot go on and find excuses for this kind of a cost or a legacy issues. At the end, I think that the problem runs around this dictionary concepts, because we are always running around regulatory concepts which are changeable. Also for IFRS, it's changeable. For instance, we had a very smooth switch from IAS 39 to IFRS 9, because it was the same contract. It was just put in a different portfolio. Portfolio was just one of the attributes of the original contract. It was not the contract in that portfolio. It was a contract which had attribute for the portfolio. So it was very smooth transition. And it really helps the forensic, both from the supervisors and bankers, because for instance, the controlling departments in Croatia now have also very granular P&L accounts for each of the, on the base of each client, because we requested so. From our side, we kind of stopped concentration of credit risk in one of the huge credit bubbles of one of the clients here in Croatia, because we were able to to check on the exposures of the banks every 10 days. Just to explain it to you, when I started my career and we had a credit bubble or problems within the system here in Croatia, it took us a week to understand how much all of the banks in Croatia are exposed to that very client. Nowadays, if we want to see it would take you like less than 5 minutes. So it is a huge improvement. It needs some sort of investment, but as we very often joke, Maciej, we really should switch to be Tom Cruise and Minority Report and prevent risks, right? And very often as a supervisor, you get this information very late, it's not complete, so you feel like you're observer rather than supervisor. So I think this kind of RegOps as an option are really the key tool for us to perform our work.
I like the idea of investment, so maybe Martina, follow-up question on this one. Juliana, I think you're operating at least in Germany, Luxembourg, I think Singapore, but let's stay maybe within Europe constraint. Let's not maybe have a global ambition yet, because it will be even more complicated. Martina, taking your role in the European supervisory architecture, what do you think is the challenges or pros and cons? I think we discussed, the pros, which will be clear to SSM in the same way as they are for the Croatian National Bank. But what are, maybe the constraints, if you look at on the more European perspective, to enable this for Juliana to have the same way how he does the data pool in Luxembourg and in Germany, to give very practical example?
Well, I can tell you from our experience, I think we really should talk to the industry. It shouldn't be like a closed, some kind of deliberations, not even in the consulting firms or regulatory agencies or supervisory agencies. We should talk to the firms to explain the need for data, how you see the data, and also how they would see the data. This dialogue and consensus around the dictionary, let's say minimum kind of data that could be standardized and delivered to the supervisors in a optimal manner, considering the cost and the time and everything that should be kind of aligned. I think this is really necessary. I think this was a huge success for us, because at the beginning of our process, we kind of thought that we would collect in this really granular data some 10 types of loans, right? And the colleagues, which I consider colleagues from the banking industry and the accounting department, said, but we have kind of 25 different types of loans. Why don't you collect all of them? And just let's get rid of these edges that you would collect an additional some sort of a data. So I think consensus around the dictionary and explanation to the industry why it's so essential and beneficial for them could be the key. If you don't kind of pass, if we cannot pass that message from the regulatory perspective, or also the providers of different technologies, it would be very difficult to gain their attention and to move on. I think that for the banks to be more competitive in Europe, this is really essential. They should enable their risk data to be collected in a better quality manner in order for them to make better decisions themselves for their daily work. So I'm curious to understand what Juliana thinks about that.
Yes.
So maybe I will pass to Juliana to respond to this, but Juliana, maybe immediately the question from the second block of our discussion, which is on the governance model, because such concepts are solved differently in different jurisdictions. But I think what I'll be interested in, and you have a lot of experiences surely from your previous part of the career, but also surely now at Deutsche Börse, is what I call the information symmetry or information asymmetry. And we've seen this, I think, with the Delta approaches on accredit, but it's a broader topic for sure, because what you send to the regulator and what you know and what the regulator knows can be different depending on the approaches. So in the RegOps, this topic is of course quite important, because the question is, are you sending a slice of data every time in the same way, or are you working with some Delta approaches? But also, if you give the granular data to the regulators, the supervisors will have more flexible way of pie charting this data, calculating own KPIs, which I'm not saying immediately introduces information asymmetry, but it changes the way how you interact with your supervisor. So what would be any of your concerns, or maybe not, that you would have if you would really give, I think Martina was a bit alluding to this, in a sense, more is less effort. So just, as a bank, we are giving all the data to the supervisors, and they should just get out of this what they need, which should reduce the burden. You also said to the ad hoc aspects, but again, we are kind of giving this potential for information asymmetry, that there will be a ratio calculated which may not be the same as you would see on the side of the bank. So what is your view on that?
Sure. I will answer to that question, but let me take on a few points Martina mentioned before. So first of all, I would also go for this RegOps approach. I think that's really an important approach. I think that's a good way forward. But nevertheless, there's still quite some way, at least in the countries I have been working, which is mainly Germany and Luxembourg, to set up that kind of approach. I think it's a very good approach to set up this RegOps based on financial contracts. Nevertheless, I think there is quite some discussion which would need to take place with the industry, because as you mentioned, some banks have really different types of loans they give, so it needs to be a trade-off between a kind of standardization of the financial contracts, how they are sent to the regulator, but also taking into account the individual contracts and setups the different banks have and propose, so that can be sent in a manner to the regulator which take into account the different business models and the different financial contracts which there are. Obviously, it would be quite a difference if we would have this pull approach, or would have this database where the regulator can really get the data from, because when we look currently at the dates when the regulators gain the data, when we look at the whole CAR report, that's nearly 6 weeks after the quarter end, which I do agree is really too late. I do fully agree with you, Martina, that we on a European level need to work in having the data readily available in much less time. But still, I think it will be quite some work until there. And as mentioned Maciej previously, especially when we look at the quarter ends, we would need some time to allow the banks to check the data, to make sure that the data quality is there, that it does include all the aspects which are to be taken into account when the accounting closes first, before the data can be made available to the regulator. And there we should also ensure that the way of calculating the bank will apply and the regulator would apply are obviously the same. Because that shouldn't be the case that the bank, when they apply the rules or when they calculate the ratios, they come to other results than the regulator. So that we need to be also working closely between the regulators and the banking industry to make sure and to have the same understanding of the different ratios and the different calculations there, because obviously we need also the ratio calculation to do the monitoring to ensure that we are above the required minimum ratio. So I think we can solve it as such that we give also the banks a certain time before they make the data readily available, and it will be a process. So I think in the first year when setting up that kind of initiative, it will take longer, or it would be needed to allow the banks longer to make this data available, to also ensure that the data quality is there, and that over time the data will be made available in a shorter time frame from the banking industry, and also that the data quality will be increased. I mean, that's what we have seen with AnaCredit. I think that was also an initiative which really pushed the banking industry and the banks to increase their data, to make sure that there is more linkage between the different data pools, because that is also an issue within the banks, that you have really different data pools, and to have a much more integrated approach there to make this data available to the regulators.
Thank you, Juliana. I think you already mentioned my next question, which is going towards the new governance models. And when we look at these RegOps similar approaches, as Martina already explained, that's nothing really new. We have countries like Croatia, which is operating a central warehouse in the sense of the side of the central bank. Yesterday, we heard from Johannes Turner from the UNB about the Austrian approach, which de facto operates a similar model to Martina. I think there were some lessons learned, Martina, which went from Croatia to Austria. They went for a custodian model in a sense. So there is a joint venture of the banks, which is in the middle, which is operating this data warehouse, but not sitting on the central bank side, but in the middle. That's, I think, the second type of approach. And the third type of approach, which we are right now experimenting with regulators across from APAC over Europe to the Americas, is a decentralized approach. Data technology allows to decentralize this approach and not to have so database, let's say, heavy technology in the middle. Martin, what do you think? What would be the approaches for Europe? Taking your central bank centralized approach, and you've spent a lot of time discussing with Johannes on their custodian based. Again, this decentralized can have probably also some charm, but if you take these different approaches, would you bet on any of these being more or less successful in Europe?
Yeah, well, I think it for sure we have to envisage that technology has considerably changed in the course of the last decade. So when we started our project in 2007, it was really a long time ago. The possibilities for technology, machine learning, etc., they were really not as much as advanced as they are now. So basically, if I were about to run the project nowadays, it would definitely be something else. So for instance, our data is collected still in ASCII code, and then it is transformed into Oracle data base. So and we are using this, let's say, essential tools which are available at that point in time. So I think for the future, the governance is always better to be on a neutral, let's say, kind of a territory. So upgraded maybe from the Austrian model, where you have a share and understanding governance from both the banks and the regulators. I think that the centralized kind of a mode is highly probable, as long as there are good quality checks from both of the interested sides, so the technology holder, the supplier of information, and the consumer, let's say, of those information. So for sure, no one should build kind of like these huge blocks where basically you put the same merchandise from one stock to another stock using the hardware to that end. I think this kind of a pull approach is much better, environmental better in a way. It's better to maybe have one truth which is stored in the bank's files, and then transfer only when it's needed and in a certain way to be operated by the central bank. This transfer of data, although it kind of, I say, removes this manipulation, etc., is also sort of burdensome. So I would definitely use the new technology to make it less complicated in this transformation. The key here is, I think, the mutual agreement about the dictionaries, and that's the whole purpose of, let's say, and problems that run around. I think that dictionaries should be free from any accounting framework, from any of the regulatory spectrum. They should really go to the very basic of the financial contract: outstanding amount, past due amount, provisions, discount, premium, contracted amount for derivatives, fair value. These are very simple notions, and they are same everywhere in each of the banks. So it really doesn't have to suffer from any sort of changes in all of those frameworks. These could be used as additional parameters and attributes to the essential financial contract, and then it's a long-standing solution, and then we can all understand each other much better. So the loan from the cooperative in Italy or Spain or Germany could be understood at the same level as the loan issued by JP Morgan, because it's a loan. It's not some kind of category from the regulatory perspective, regardless of how, for instance, you mitigate the risks, which risk weight you use. It's irrelevant. It's that simple, same type, let's say, of the contract. So I think we usually should just go back to basis. and a governance around maintaining this dictionary, giving explanations for the dictionary should be then shared and provided as a consensus from all the regulators and the industry as such. In terms of what Juliana said, how you make control out of indicators calculated and aggregated reports. I don't know if it was noted. In Croatia, we solved that by sharing our rules for aggregation with the banks and returning, let's say, those aggregated tables to the banks. In the first year, we had issues because basically our aggregates sometimes did not match. But that is not, for many, many years, not the case. Basically, what we conclude are the total assets, total deposits, total loans that the banks wanted to report is the same amount that they calculated themselves. So I think that could be done for any of the regulatory indicators as well.
Mm-hmm.
Thank you, Martina. And I think we have a joint agreement on the financial contract level dictionary. And I like also your comments about the technology advancement. If I think back, 2007 was when Steve Jobs was introducing the first iPhone. And why we are at iPhone 12. So of course, technology moved massively, and there's different possibilities to build such infrastructure. We've seen in 2013 how the Austrian approach went with a different technology setup, and today we are 7 years farther. So that's why, of course, there is a different approach. I would like to encourage our listeners to maybe join the next session where Daniel Münch will be discussing, this encryption-related topics, decentralized approaches from bit more technology point of view. But let's jump back to the RegOps, and Martina, maybe one short question to you and the same question to Juliana. Martina, you said when you started 2007 the project, there was already ideas about the maximum harmonization. So if you would move to this European approach, you would start losing information or losing data. Now we have the European harmonization of the COREP and FINREP side, so CRD framework. How would you foresee the European legislation? What would have to happen for this legislation to allow the granularity and the joint data dictionary? And of course, same question, Juliana, to you. How would you, as Clearstream Deutsche Börse, react to such legislative changes? So we are talking a bit about the time frame of such legislative change.
Yeah. So thank you. Well, I was a member of SCARA, the EBA, in my previous role in the central bank when all of these FINREP and COREP regulations were adopted. And we had a strong, let's say, discussions about what sort of definition should be a data point, right? Where it was very difficult at that point in time to say the data point should be really something very, very essential, something that we should really collect as a database. So it kind of has not been able to, we couldn't have a buy-in of all of the jurisdictions for that. Now, I think everyone is more or less aware of these databases because we get all of these frequent kind of reports on and with GDPR about how Google and Facebook are collecting our data and to which granularity of data they collect about us as a consumer. So I think everyone can see that this is manageable, right? That there is a technology behind it and that this granularity of data is the thing to collect. In our case, our project was run in, let's say, 3-year time frame. First, we discussed with the bank let's say, the nutshell of this regulation. Then we discussed the regulation itself. And then after that, we had this probation period where we run parallel systems. So collecting tables and collecting database, this granular data, in order to, when we kind of go out from one bridge, that we have a safe kind of project running smoothly also without collecting tables. In the European perspective, I think it should be like maybe at least 2 to 3 years for each of these periods. At first, we have to understand, I understood that FISMA is also running some sort of, let's say, a project for having this common dictionary of terms, because terms are the same everywhere you go, because financial contracts are the same, regardless of which industry you're working in, the contracts are the same. So I think that they understood, the Commission also understand that the regulation should run around those granular data. So we should have a regulation around it, decide on whatever technology providers, that could be many, it doesn't have to be exclusive, but set up, let's say, a key request from the regulator side to collect those data. And I think it is manageable in that time frame, because let's say the time has changed, and there is also a couple of other, let's say, incentives. We want to see, as we were discussing, maybe to have a European cloud, because the banks now, with the digitalization, basically are using a technology which was not originated, let's say, in Europe. There is a huge pressure for anti-money laundering supervision. All of those activities require data and a better technology on the European soil. So I think we could have kind of a push for that, and have a very consistent project to be run from the European Commission as a regulatory proposal in a way.
Thank you, Martina. And Juliana, while we are translating with the same question on legislation to you, I would like to encourage our audience maybe to already ask questions in the chat, so we can then refer to the questions while we are slowly adjourning. So Juliana, how would you react to this legislative changes? So what would be the bank's perspective on such approach?
Yes, I think the first reaction for such a huge or important change would be that it will be quite a cumbersome and a lot of effort to implement this new database, where the regulators can pull from the data, whereby on the long run, if we look on the long run, what that would mean, I think it will be an advantage for banks. Nevertheless, the time needs to be allowed for the banks to implement that. And we have seen with AnaCredit how much effort it was. And we have, or there are still banks who still need to work on the data quality, also on the volumes, because it's a high volume of data for some banks, how to check that, how to ensure that, well, this is good. So we really need to allow for quite some time for the banks to implement such an important project, if it would become new legislation, which for us at Deutsche Börse Group would be really important. Something which has been also mentioned is that it should be really new legislation on an EU level and not have national discretions with it going forward. That would be quite important, because otherwise, here again, since we're a group where we have activities and entities here in Germany, based in Germany, based in Luxembourg, if we look at the European level, if we would have some specialties, we would need to implement them. And I think it would be really going forward an advantage to have a common database on the EU level. That's why I really like the Croatian approach of defining financial contracts and not going with the different gaps. For example, indeed, we are in the case where we have entities reporting on the German gap, we have entities reporting under IFRS. So here, again, we have the different gaps, different aspects which need to be taken into account, and to have really a database which is independent of the gaps. I think that's important. And also to have a database which indeed is also independent of regulatory developments. As we have seen in the last 10 years, there were quite some regulatory developments were, well, still all in the midst for the banks to implement CR2 to be ready by June 2021 with this new regulation. So it would be really helpful for the banks to have that independently of those changes, and that those changes by a joint work between the regulators and the banks can then be added on to the data, which is then there as a basis in this data pool where the regulators can pull from. I think that's quite an important aspect to have a successful implementation of such a database. Further aspects which have been briefly discussed is how to set up such an endeavor. I think for us here at Clearstream, it would be quite interesting to have just a data pool where the regulators can pull the data from, so not having to transfer the data somewhere else. this has different aspects. So first of all, we would need to hold the data just one time and not also transfer it somewhere else, and would be then, well, hold the accesses, make sure that we know exactly who will access the data when. I think that's quite a key topic from us, but I would also assume for other banks to have still the ownership of the data there.
Thank you very much, Juliana. I think that's indeed an aspect that we are looking into with bring your own key, and there's quite exciting technology solution for exactly the issue that you mentioned. Mm-hmm. And I also like the European vision, but let's be realistic. And the closing question for both of you, we are talking about, Martina, from your perspective, the minority report type of supervisors, which, you can have this pre-crime view or pre-supervision view before something happens. You have much more real-time-like access. We are sometimes using, in discussion about RegOps, the Netflix for regulatory reporting. So, we are pulling the data without burden for the other side. But if you take this and try to put a date on it, when would you bet could Europe move to such approach? And indeed, as Juliana mentioned, if we just talk about, major number of European countries, maybe not all of them, but a kind of a European move to have such a granular data pool approach. Juliana, what would be your bet on a date out of blue?
Yeah, I think the first thing is when well, politically or the regulators would agree on a common approach. I think that will take quite some time. Let's say once this is done, I would guess really to have a stable database, a common understanding of the whole contract, really full setup by all banks participating in this data pool. I think we should count to 4 to 5 years to have that set up.
Thank you, Juliana. Same question, Martina, to you.
Yeah, well, if before COVID pandemic, I would definitely maybe tell you a decade.
Oh.
But since now we have like digitalization on a large scale, we see that basically all of the financial industry is a technology industry, because the banks are competing with technological solutions for their clients. Internet banking, mobile banking, these are all technological solutions, so they know how to upgrade it. And we see the switch from the Commission with the need to have a little bit of cleaning up of all of these, let's say, IT risk aspects. We have this digital operational resilience proposal, which is really great, because basically IT risk, you have everything from insurance to this crypto asset issuers, banks, of course. So why do you make a huge fuss of it? Make one concrete regulation. I think that cleaning up in that sense should be in this reporting era as well. And I would agree with Juliana for sure. I think 5 to 6 years would be nowadays something where this is achievable, and I think that we in Europe can see that these are also, let's say, that some political wins which are good, and actual contemporary situation that reassure that the digitalization is possible even at this very high pace.
Thank you very much, Martina. Thank you very much, Juliana, for joining this panel discussion. It was very interesting to have both the views from the bank and the view from the regulator. And I'm looking forward to further discussions today. I would like to encourage our audience to ask questions in the chat box. And with this, again, thank you very much. And looking forward to see how RegOps will develop. Thank you.
Yeah. Thank you to you, Maciej.
Thank you.
Thank you. Thank you.